Welcome back to the Investing on the Go podcast. In this episode, we're delving deeper into the investment opportunities and risks of artificial intelligence. There are four main types of artificial intelligence: reactive machines, limited memory, theory of mind, and self-awareness. But for the purposes of this podcast, we'll be discussing the topic as it aligns with the Sanlam Artificial Intelligence Fund, and we'll start with manager Chris Ford giving us his definition of artificial intelligence.
I'm Ryan Lightfoot-Amanoff, and today I'm joined by Chris Ford, the elite rated manager of the Sanlam Artificial Intelligence Fund. Chris, thank you very much for your time today.
It's a pleasure, Ryan. Thanks for having me.
Now, let's start from sort of a broad level. What is artificial intelligence, and why does the world need it?
Well, that's the most difficult question you'll ask today. So artificial intelligence, we say, looks to synthesize, automate and optimize the process of converting information into useful and actionable knowledge. And that's a definition that we've used for the last 6 years. And it's one that builds on the work of a gentleman called Demis Hassabis, who's an extraordinary man who's done brilliant things with AI through his leadership of a company called DeepMind that many of the listeners here will have come across. And it's a slightly different, nuanced definition of AI when compared to others. It's not a definition of AI that looks to define AI in terms of human intelligence, because, of course, there are many different types of intelligence, and we think it's important to reflect that. There are many solutions that are being delivered into the world today, which, whilst not necessarily capable of a human level of cognition, are still providing great insights and practical help to those who are using artificial intelligence systems that don't necessarily approximate to human levels of intelligence. But what we also like about our definition is it's an intensely practical definition of AI. What really matters is its ability to take that data, take that information, and turn it into something that's useful and actionable. And that's what really is, of course, attractive to corporate buyers and consumers at the moment who are able to engage with artificial intelligence systems to deliver something that is beneficial to them in ways that they never previously could.
And in the fund itself, you don't invest just in the sort of the pure artificial AI companies themselves, but also those embracing AI in their existing businesses. Can you just maybe explain why and bring that to color with sort of a few examples?
Yeah, sure. So there are many companies that are developing artificially intelligent systems, developing the tools, if you like, and selling them to third parties. But even more, there are companies that are utilizing artificial intelligence systems to revolutionize their own business processes internally and really kind of drive and deliver change within those organizations. And really, that's what we're looking to invest behind. But there are also those companies that are looking to do both of those things. And an example of that would be a United Healthcare, for example, in the United States, which very early understood the benefits that artificial intelligence systems could deliver into its business. And whilst using some off-the-peg solutions, also invest very heavily in their own data science capabilities to deliver what they regard to be a significant competitive advantage relative to their peers. So it's important for companies like that, for companies like John Deere in the machinery space, for example, to invest in their own solutions because they recognize it very significantly enhances their competitive moat around their businesses. For other companies that maybe don't necessarily have as deep pockets or the innate capabilities from a skills perspective inside their organizations, the opportunity to really invest in their own AI is going to be somewhat limited. But that doesn't mean that they can't engage with the process. And so for those companies, we find examples that are buying artificial intelligence systems off the shelf, if you like, and doing a bit of configuration and still managing to deliver very significant benefits to their organizations. And so it's important to us to focus, yes, on the presence of AI, but it's as important for us to understand how the AI is being delivered and the benefits that it's delivering to a business model, because of course what we're ultimately concerned about is the extent to which there is a significant cash generative impact as a result of the better presence of an artificial intelligence system within a business.
And when you launched the fund in 2016, you had about sort of 10% of your investment universe in the Asia Pacific region. You recently said this has grown to sort of nearly 50%, so nearly half of your investment universe. What's been going on? What's the reason behind this area's been growing so significantly? I imagine it's causing you a few sort of early mornings as well.
So we have committed quite a lot of incremental resource to the Asia Pacific region to reflect that change in the shape of our opportunity set. And what we're seeing in Asia is an extraordinary burgeoning of opportunity from an artificially intelligent perspective, and that AI is bringing with it disruption at a rate that we simply haven't seen previously in the Western Hemisphere. The rate of industrial disruption that we're seeing in the Greater China space, but even more broadly across Asia, is truly extraordinary, and it makes even what goes on the west coast of the United States seem positively tame by comparison. I think it is poorly understood by investors. And we have some frameworks that help us to understand that rate of change and to model it from a business perspective. But we're seeing companies appear in timeframes and scale to significant size in timeframes that simply would be inconceivable in the Western universe. And it's partly a reflection of a younger workforce that is typically more digitally native in the Asian Pacific region than it is in the Western world. It's a reflection of a corporate world which in some cases is less aged, so you have less baggage to bring with it. And of course, just stepping aside from AI specifically, AI brings with it the requirements to embrace change, and embracing change is something which is very difficult for many corporations to undertake. And the more change-minded an organization is, the more likely they are to successfully embed within their business processes artificial intelligence systems. And so if we can find those companies which have less of that cultural baggage, then it's easier for them to engage with these systems. And we are finding more of those companies in Asia. But I think just culture more broadly is redder in tooth and claw in parts of the Asian market than it is in the Western world. In Silicon Valley, there is a kind of innate respect for innovation and a sense by which the innovator's best interests should be respected and protected. And to some extent, those things are less prevalent. Those attitudes are less prevalent in Asia, for good and for ill. We're aware in the Western world of the kind of pillaging of intellectual property, which is thought to be rife in the Asian world, particularly in the Greater China space. And that may or may not be true, but it is certainly the case that the fast followers follow more rapidly in the Asian context than they do in the Western Hemisphere, and that brings with it a requirement on the part of the innovators to move ahead themselves that much more rapidly. So we just see the whole edifice moving much more quickly, to the extent that you're right to highlight our investable universe having grown significantly, but we have also seen right the way across the economy significantly higher levels of penetration of artificial intelligence systems into corporate entities in the Asia Pacific region than we have in the rest of the world.
And are there any signs of this happening or starting to change closer to home? Any sort of green shoots? We can't make our population any younger, so that's one of the advantages gone. But are we taking sort of any of their cues from the culture change? I know in the UK we've seen some commentary on the political side about getting more tech companies onto the market, supporting IPOs in that way. Is this going to change the outlook for the West at all?
I think AI changes the outlook for everybody, frankly. I think and to think differently, I think, is to have one's head in the sand. And that's not to say that you should necessarily agree with my perspective entirely, but it is to suggest that not to have a view on AI is really, I think, unacceptable now. It's, AI has come flying out of Pandora's box, the lid having been lifted over the course of the last 10 years, and it isn't going back inside. The UK, has a wonderful opportunity in AI. It is in many ways a market leader in AI from an intellectual property perspective. The R&D efforts in the UK are second to none. The university output from the perspective of AI engineering talent is extraordinarily high here in the UK, and Cambridge in particular is a real global centre for AI innovation, with many companies having global AI innovation centres based in the Cambridge region, and also, of course, in London, with DeepMind being the behemoth that is one of the two twin pillars of Google's AI. So there are signs of things going on close to home. The UK market has been a disgrace, really, in respect of its willingness to fund AI companies and tech more broadly for at least 2 or 3 decades now. And companies in the growthy end of the market and in the tech end of the market have very rarely, if ever, enjoyed the kind of support in the UK that they would get in North America and elsewhere. And I think it's, from a market perspective, it's difficult for me to recommend that a new company look to list in London when the opportunity to list in New York would be available to them. And you see a company like Endeavour, for example, which is a UK IT services company, which has been incredibly successful at what it's delivered over the course of the last 5 years or so. And has had that success reflected in its multiple for most of that period, and you look at the success that company has had in the reception that its stock has received in North America, and compare it to companies like Blue Prism, like even Ocado here in the UK, and it's been much more difficult for those companies to really be as successful as they might have been had they been listed elsewhere. So I think we in the city need to look to ourselves. Really, in respect of our willingness to fund innovation and find ways to invest in those companies in a market which is still incredibly focused on jam today and the requirement to provide yield to our pension funds.
And you alluded to earlier in that question that you think we're only in sort of the foothills of the AI adoption story. How do you see it developing over time? How far can it go?
That's a very difficult question to answer because it's got an awful long way to travel. And I think, it's always been a bit of a mug's game trying to identify an end point for human innovation, because there's always something that, a creative soul somewhere will dream up to take technology to the next level. Look, we are incredibly early in the journey into the artificially intelligent world. And something that we've found engaging with AI, we use an artificially intelligent system to help define our investable universe in our investment process. Something we've found, which many other people have found, is that as you tiptoe into the world of artificially intelligent systems, the system might address the particular need that you've identified within your business process. But as it addresses that, it then opens up myriad other opportunities for inquiry and engagement with the field subsequently. And I think that certainly the gating factor for our engagement with AI in our business processes is really our own imagination and creativity in respect of how we think that AI might be able to help us to do things better and more efficiently in the future. When I look around the economy at the moment, I see so many opportunities for AI, many of which are not yet addressed. We are constantly told that autonomous driving, for example, is something which is not going to happen for the next 5, 10, 15 years, depending on who you listen to. We happen to think that it will happen a little bit earlier than I think most people think. But to the extent that it is all really remarkably long dated, all of that innovation is still yet to come in that part of the economy, which is very clearly identified as something not a feature that it's debatable whether or not it's going to happen. It's just a question of when, not if. And so we're talking about timeframes. And there are many, many other opportunities. And I think your point about the aging population, the fact of an aging population is a very powerful backdrop for the engagement with artificial intelligence systems. We're seeing in Japan already, a country which is beset with even more demographic headwinds than we face in the UK. We're finding that the opportunity to develop artificial intelligence systems to address shortfalls in the labour market is very, very obvious, and to then provide services that simply would not be provided if human capital were to be relied upon. So for those of us who are concerned about wage inflation, concerned about labour shortages, concerned about long-run inflation on the back of that, the opportunities that are provided by artificially intelligent systems to provide some solutions to those problems are readily apparent.
And sort of beyond the demographics thing, has the adoption of AI been accelerated by the pandemic at all?
I think it has. We've certainly thinking about corporate digitalization more broadly. It's widely understood that the pandemic certainly brought forward quite a lot of that activity, and we heard from luminaries such as the CEO of Microsoft, quite early in the pandemic actually, that he thought that the first couple of quarters of the pandemic, we'd seen 2 years worth of digital innovation brought forward that time period. So we've seen a race to adopt these platforms, and I think as a result of companies being forced to undertake their business differently, some of the sacred cows, some of the kind of laziness, if you like, and unwillingness to engage with change was removed of necessity. And I think that that's been a very powerful thing. And I'm not sure, in the same way that it's often said that we're not going to go back to shopping in the same way that we did before the pandemic. The transition to e-commerce as a consumer is here to stay. I think in terms of corporate behavior, corporates have had to think differently about how they do their business, and they've had to expect different things of themselves with regard to delivering change and the timeframes within which that change needs to be delivered. And I think having seen what they're capable of, my hope would be that the corporate world would expect more of itself as we go through the next 5-10 years, as we, in respect of engaging with artificial intelligence systems over that period. And that's certainly what we're seeing from the companies in which we invest today.
And we have talked a lot about the sort of the positives and the outcomes of it, but what are the risks to the growth in AI? Obviously, we've all seen the sort of Hollywood movie style things, but is that a realistic risk, or is there sort of something else in the market that we need to be conscious of?
I think the risks are apparent, or some of the risks are apparent. I think there will definitely be risks that the kind of unknown unknowns, if you like, that will materialize over the course of the next few years. I think the good news is that there is a conversation going on about many of these risks and how they should be mitigated, and that's very important. I do think that regulators have been slow to respond to the burgeoning of artificial intelligence systems into the economy. I think that, candidly, there are as many brilliant examples of AI looking to address persistent current iniquities in the economy, as there are examples of AI that looking to that will bring its own iniquities. An example is a company called Upstart, which provides a lending platform in the US, which is looking to provide credit at affordable rates to parts of the population that are traditionally underserved. And of course, traditionally, those populations that are underserved are not only those that earn less money, but partly as a function of that, they tend to be immigrant populations. They tend to be ethnic minority populations. And so the opportunity that AI brings to provide a much more objective assessment of creditworthiness in this environment is very, very important and has been a long time coming, and hopefully should address some very significant inequalities in the system. And I should say in America, that really matters, because if you don't have access to credit, you basically can't go to school. So it's not just buying the new big screen telly or the new car, it's your ability to live the American dream through education. And I think that's misunderstood. So there are some great opportunities of AI doing some really interesting things to address problems that humans have failed to solve for themselves for a number of reasons. The last thing I'll say here is that there are significantly different approaches to the ethical problems associated with AI. Particularly when that's mapped out of abstraction and brought into the world of regulation. And the regulatory arbitrage that AI is bringing with it is very significant. And so the means by which AI is being regulated in China is very different to the means by which AI is being regulated in the European Union. The Americans have a third way. And this is really important. I would argue now that actually, if anything, the Chinese have a better and more rigorous and more comprehensive regulatory environment for AI than anywhere else. Now, we might not like it because our particular, Aristotelian philosophical background might think that it's something which we don't like. We don't like the overweening access that the Chinese system might bring to personal data, for example. But when looked at from a Confucian background, actually maybe that's less outlandish than we might think. So I think from a Western perspective, one has to be a little bit careful at slinging too much mud in the direction of others who would look to regulate their industries differently, particularly in a world where we haven't got our stuff together yet. At least they are regulating, And anybody who's been invested in Alibaba or Pinduoduo or Baidu or Tencent or JD.com over the course of the last 2 years will have felt the teeth of those regulations biting very, very hard. But I think we're now in a position whereby we can understand what the regulatory environment looks like, and we can invest within it. And that usually is a very powerful place to be, because we now understand what the rules of the game are.
Well, as ever and as expected, Chris, it's been incredibly interesting. Thank you very much for your time today.
Not at all.
The Sam Lam Artificial Intelligence Fund, as Chris alluded to in this interview, uses AI systems in its fund process to help find companies whose business models are aligned to benefit from the growing world of AI. A particular standout feature of this fund is its ability to look for companies that incorporate artificial intelligence systems into their business models, rather than simply those companies making AI today. To learn more about the Sam Lam Artificial Intelligence Fund and read other thought pieces on the topic of AI, please visit FundCalibre.com. And don't forget to subscribe to the Investing on the Go podcast for weekly insights. Please remember, we've been discussing individual companies to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these companies at the time of listening. Elite ratings are based on FundCalibre's research methodology and are the opinion of FundCalibre's research team only.